General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. Still Q1, February. NFP is canceled. Bitcoin had a bad day. Silver had a bad day. Let's look at the anchor reassessment for the week. Do we feel like we got high, low of the week? Do we feel like Tuesday? Let's say this thing. There we go. So far, it's looking like Tuesday. But current on. Okay, look, we took out those equal lows. Does it look like we hit fair value for buying? Nah. Looks like we're coming for this 200. This 200 is at 23,855. That might be our fair value. Or we can keep dropping. Really. So Tuesday out of the week. Looks like it will hold. Just weekly buys template. I don't think we will take Tuesday high. I think the sell-off continue. Maybe to the 200-day moving average. Right. It has been taking up all the ADR. We need a small range. We need a small range overnight. And some news to really get quality. Only no mistakes. We did good this week. You know, in tune, stay locked in. Time frame, context, time and bias. It's kind of lining up. So, time theory is week one. Is the Judas up one. This is playing imperfect. The only thing is, February is a down close month in the seasonality. So this week could be a measure move. We can take next week off and do the same type move again. Same type move down again when the video report hundreds. The charter just started showing when it's time to buy anyway. Expansion down, cleared lows and monthly levels. Probability discussion, narrative framework. It's good. Experience, success, failure. Main failure want to tighten up is quality of stock management. Tend to go be too fast and the need to take more partials. Case study, vault reference. We don't got one of those. Let's put the date. What's that? 2/5. Today's expansion day. Engage. Medium. Looks like we got Tuesday being the high. Expansion is playing out. Hit everything I wanted to hit. Past my terminus. Let's go here. So it's weird. Asia kind of housed London, and then who was it? The unemployment, yeah, unemployment came in terrible. We had a 2 session down day or two. Hold on, wait, cancel. AM session dropped and PM session, so it's that AM PM decline. Until in Asia until job data AM and PM session declined. And I don't like the way it dropped, so here that would have had the hell for it to be bullish. It didn't. Here completely closed December's low. It's probably not no more CFD, SMT or whatever. So this up candle is now a bear shorter block. But it's the last key level too. I wouldn't trust it. We need a fair value gap or something I can use as an inversion. If we break through, we can still internal range liquidity sweep this. We need to break through this and this. Like, we close above these two levels, then it's like, all right, that's enough to buy because it's gonna try to trap buyers. I think the only people that's gonna be selling now are like the emotional sellers. I think the institutions closed their positions. So it seems to be slowing down. That last push. Seem to be weekend emotional traders. There's no follow through for that move. Amazon had bad earnings. Those guys gotta get, well, I don't know if they're gonna hold, but they gotta cut those positions tomorrow. People gonna start cutting their trade before earnings. But some people's gonna gamble. Or it might not be a gamble, it might be their thing. We made it here. People act like we down here from American Liberation Day. Yeah, might as well get the two for, yeah, 60-day into low. People ain't ready to buy yet. So to be excited, it needs to feel like a good deal. Mm, this looks terrible, all them wicks. PM session sales week. Weekends. Nasdaq. Um, yes, might be better for bulls. Nasdaq is selling way faster. So you want to buy, then ES might be a faster buy. People want healthcare and finance and industrials and Walmart. Okay. All right. Price selling off. Even the lowest is so pretty going back to the highs. We really only need one good thing to happen. And we back at all-time highs. Oh, here. Might be waiting on SPX to get the fair value. Nasdaq is not respecting anything. And it might be the smaller companies that push Nasdaq back positive. Palantir do it though. Yep. Yep. Master and flow state and continuations or type 2 internal liquidity sweeps. to date. All right, let's start on that. I have a good day. Peace.